All right, what's up, YouTube? My name is Jelfrey Torres, and today I'll be going over the dangers of FOMO, which is the fear of missing out. Today we'll be looking over 3 different forex pairs and different setups that occurred in the week. I want you guys to really focus on the concept of it. This applies to all types of traders, whether it's you trade support resistance, indicators, supply and demand, institutional trading, all those kinds of things. This concept applies of the fear of missing out, where you are kind of like on your tiptoes. You're like, this is gonna be the big move that I've been anticipating for this long, and I want to get as much profit from it as possible. And these natural human ambitions, emotions are what really make us want to act out of compulsion. Just, I need to do this now, quick, and I need to win big, and that's a big problem. So first pair we're looking at is at Euro GBP. Here we have 2 time frames. On the left side, we have the 15-minute time frame. On the right, we have the 1-hour time frame. And we are using this fresh supply zone as our area of interest, where we would look forward to possibly entering the market. And that same box is drawn out here. Now the only difference between these two is that this is current price action as of, let me see, June 24th. And this price action here, we pushed it back a little bit. As you can see on the cursor on the left and on the right side, you can see that on this side, it's right here, this 1-hour candle. See that? That's the current 15-minute candle here. And I wanted to go over, have price action move about as if it were live. And we'll be going over possible human emotions as prices moving towards your area of interest. Okay, so here we start with Euro GBP. It's, we had a strong push down. We have a fresh supply zone. And this price action that you see on the way up here is this price action here. All right, and the high ended here, went back down, came back to area of interest. But for now, we're going to focus on this move up here. Okay, so this move up occurred during Asian session and a little bit before London session. Okay, so here we have price action moving up, and it seems that demand is kicking in, and we're in for a ride to the upside towards our area of interest. And if you were to look, it's about 20 pips away. So for Euro GBP, that's possible for it to move that far for London session before seeing some type of move down, right? So let's move it a bit. All right. So as you see here, now we see a strong bear move down. And mind you, this is the 15-minute time frame. So when retail traders are looking at this, and by retail traders, I mean everyone that's watching this video is a retail trader, pretty much. So looking at this move here engulfed 2 candles, right? So that would made a lot of traders suspicious and say, wow, so maybe I was aiming a little too high here, right? And mind you, on the 1-hour time frame on the right side, you see that this is not the end of it. But as you can see here on the 15-minute time frame, it engulfed two of the so one 15-minute candle just engulfed the past half hour of price action. So here you could be thinking, oh man, maybe it's not even gonna go that high. Maybe it's just gonna drop down from here. And some traders may even enter at market execution right here. Put enter. And look at the 1-hour time frame where the entry was. And look what kind of drawdown you could have possibly seen, not knowing what you were doing. So just matching that, that was about 13 pips in drawdown of, unnecessary drawdown on your GBP. And as we continue here in the 15-minute time frame, you saw that bear push down, faked out the sellers, and now it's continuing its push up here on this candle. And as you can see how this hour candle ended. All right. Now this is another instance where you could feel like, hey, maybe, the bears are just coming in slowly. Maybe it's just going to be a stronger drop each time, you know? So price action was pretty much proving it here. Some choppy, a little stronger, way stronger. And now we have this 15-minute candle showing this. So this may have been another instance where, you may feel that, this is it. This is the big move that I've been waiting for. I've been staying up at this time waiting for this exact thing to happen. Well, not really exactly this, because you want it to get up here. But it may be that, price is headed towards your entry, but you're just impatient. You feel very impatient. You just want to get in the trade because you want the profit. Now, you've been waiting this long for this. And, the market is unforgiving. It doesn't care whether you waited this long or not. It's all about information. This is just information being printed to you. All right, there, another bear candle here. And, it waked up, came to this supply area on the smaller time frame, dropped even further. So there are traders that would even market execute here because they're like, okay, yeah, this is it. We're in London session. Well, this is 15 minutes before London. This is the move. A lot more liquidity is about to enter the market now that we are in London session. This is it. Let's get this. Let's get this money, right? Wick slow, right? So some traders here would have seen some profit. Depends if they were scalping or not, or if they were just watching the trade and then this happened. Boom. If you had your stop loss on top of this price action here, then yeah, your stop loss probably got hit. The spreads were pushed up a bit, so price actually made it up here. Several more pips. So this is about 52. Yeah, your GBP spread could push 3 or even 5 pips depending on market volatility. So yeah, your broker will print this, but your spreads are pushing price all the way up here. So if you had your stop loss above this, it probably got hit if you were trying to like mitigate your risk by having a tighter stop loss. It's also not a good idea to have too big of a stop loss because then you're permitting, and you're indirectly letting the market, go. How can I say this? I would say letting the market give you more drawdown than it should, because you may not be content with the profit. So you continue to hold even in deep drawdown just to see the profit that you were anticipating. But the market doesn't have to give you a certain amount of profit. It gives you what it gives. You take what you can. So look, I know you guys saw that. Bear move down, push up. This is high manipulation happening during London session. Right, and then that's the big push down right there, right here, that we're waiting for. So again, so that's about 9055. Spreads could have pushed it up to 906, or even like around here, So if you were, selling early, your stop loss could have got hit here. And, this area now is at question. Now you're like, okay, it didn't reach my area of interest, but I just saw this strong move down. Let me get in the market before it's too late. So you get in here. You get on this candle because it only makes sense, right? This engulfed pretty much the last, what, 4 or 5 hours of price action. Let's do it. Right? And then as you see here, you get into some profit, and then price pulls back very quickly right here. Boom. Now that makes some retail traders feel like, oh no, 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 no. This is a fake move. Let me get out of this. Some traders may close at this point in small loss, because you have to pay the spread, and we entered at this here, so 9038. So that's about 2 pips plus spread, 3 pips, 5 pips from drawdown. That was unnecessary. But price comes back in. So if you held, you're like, oh, thank God, like, I'm so happy this happened to me. So, this is just an emotional ride that we're taking here. So if you look here, you'll see that this is just the second candle here to the, towards the downside. Price continues is drop, pulls back up real quick. Just keep in mind there is spread here, so even though it moved down a bit, this could still be at break even or even at small drawdown. This may look like a big move, but all in all, it's doing a lot of whipsaws back and forth, putting traders at small drawdown, small loss, small profit, keeping them guessing. Okay, and then eventually price drops down even further. Now there may be some traders over here that trade breakouts. This is an instance of a breakout. Well, there are several instances of breakouts, whether it's the wick or the body that you're looking forward to. You may enter here or here. And as you see this feels like, price is just going to keep going down. Like, we already broke structure and the momentum is strong. Price comes back up. And as you can see, it's doing the same thing. It's wicking all over the place, having traders constantly either in, like I said, small loss, small profit, break even. Your GBP is not that volatile up here, but by volatile, I mean amount of pips it moves, but it is very spiky, which makes it unfavorable for those that do not have patience. So again, we came back down here. So those breakout traders were content for a second. Now they're back in drawdown. Whoever sold here is probably at break even again. So like they're like, price showed some momentum, but now I'm at break even. And I've only been holding this trade for let's just say 2 hours, and you weren't able to amount to much profit at all. Went to about, so from here went to about 10 pips in profit. If you scalped it, then you took some profit from the market. If not, you're going to be frustrated because you wanted more profit from the market. Now, this is not to encourage only scalping, because not everybody is a scalper that can stare at charts all day, or all like focus on a chart for an entire session, and sessions last, so New York and, well, all sessions last 9 hours and they overlap on top of each other. So the most liquid ones are going to be London and New York, right? So those are the ones that we want to focus on the most, especially when they overlap. Okay, so on Euro GBP, a lot of spikiness happening here, And if we move our arrow on the left here, we'll notice that this is where we're at here, right? So the most profit you could have had on Euro GBP was 10 pips here, or even less depending on the spread, okay, and where you entered. And then what ends up happening? That spikiness you saw again, right? That move down would have made more traders sell. And as we're all anticipating the move back up here, and as you can see, it's spiking up and dropping, making traders confused, despite the fact that, you know, the momentum has pushed upwards, right? And as we can see on current price action, it has reacted to our area of supply. You know, you could have entered at, you know, equilibrium, so about 50% of the supply area, or you could have entered at the body of this candle, as price action hasn't challenged it until it entered here. So if you would have taken this trade at the equilibrium point, you would have been 10 pips, so about 5 to 8 pips in profit. And with the body, it would have been possibly 3 pips or break even. Okay, so that's your GBP. Let's go to another pair. All right, here we are with CHF JPY. On the left, we have the 15-minute time frame, and on the right, we have the 4-hour time frame, right? So same thing here, we see a fresh supply zone, and what we're interested in is having price come here, which it hasn't yet. You see, this is live price action as in June 24th, and we are about to enter Sydney session. So essentially the start of a Forex day. So daily candles will close in about an hour, as you can see here. Well, 50 minutes. But yeah, I believe we have this chart here on replay. And what we're looking for here, like I said, is that short opportunity off this fresh supply zone. And as you can see, price is pushing upwards. So this can induce traders to buy. Now the tricky part about this is, you know, you can see those bounces up, right? But at the end of the day, price is moving between 56 and 83. So that's about 17 pips back and forth, back and forth. And there's not much profit that you could take when you're you know, trading consolidation, because at the end of the day there is spread and manipulation of spread based on your broker. Okay, and if you need like a reliable broker with tight spreads, good commissions, we have one that we recommend. In the description box below, it's called Coinex. All right. All right, so back to the chart, CHF JPY, and we're waiting for this drop here. And as you've seen here, it had an instance of a strong push down. So this could have been an area where traders felt impatient, because as price came, it's coming close to entry. So this is about 18 pips away from entry. It had that instance of a strong and quick drop. Some traders would have entered here because they were impatient and they couldn't wait for price to get to their entry, because they feel like, yo, you know, this and this person caught this trade and it moved this many pips and I'm never able to catch something like that. Well, this is part of the reason why, because this will impact your future trades and make you feel hesitant on trades that could potentially bring you that many pips in profit, and you're just stopping yourself because of a lack of patience, greediness, and such. So as you can see, price is still consolidating within this. So by reaching up here, it's about 20 pips, 20 pip range. And as you can see on the right side, CHF JPY on the 4-hour, we're reaching, what would be the induction of buyers and a slight drop in price action. And as you can see, it's still consolidated within the same zone. So traders were frustrated here. They were trying to short it and buy the market, because at the end of the day, all it did was consolidate, and your spread is not going to let you get that much profit, if any profit at all is attained. So as you can see, price is coming close, very close here, entry here, 9 pips, right? And you're like, bam, right there. You see this here, and you're like, oh man, I just missed it. Price wicked up, came about, let's see, 5 pips with an entry and dropped. So that's a tragedy right there. If you were trying to enter, you could have entered at market execution here on this candle, and you would have been in about max profit, probably 6 pips, maybe 6 pips. That's if you sold at that instance. But market conditions change all the time, and greediness makes us hold on to trades because we don't believe that we're only going to get 6 pips profit, because at the end of the day, the spread is going to take about half of that, if not more. So yeah, we have this entire move down on CHF JPY. It's consolidating, chopping around. All right. So if you entered here, you would have been in drawdown. Drawdown profit. Drawdown profit. This is psychologically damaging if you were to try to just trade like this. So it's 5-6 pips drawdown plus the spread, so it's like 10 pips drawdown. For who knows what profit. Like, it's easy to see in hindsight and say, hey, I could have taken that and taken that profit. But in the moment, when you're caught with, your emotions, which we all can and will be, you got to know how to act accordingly. Because at the end of the day, this price action here, that took 4 hours. And for those 4 hours, the max amount of profit you saw was like 6 pips. And then you saw 7 pips of drawdown. So that's even more drawdown with the spread on top of that than profit, even though it looks more profitable based on this range here of drawdown to the upside and profit to the downside. Okay, so when you're back testing and looking at the market structure in the past, you got to take all of that into consideration and think about what's really going on, because behind the scenes, this is a lot of information, but you also got to consider what it's like to trade it live. Okay. And then after that, as we move our arrow here, as you can see, we're moving more towards current price action. Now it's heading closer and closer towards the area of interest of this supply or fresh supply zone that we have here. Okay. And now last pair, Euro CHF. On the left side, we have Euro CHF on the 15-minute. We have Euro CHF on the 4-hour. And on the 4-hour, we have noted this here, that this is accumulation of price action, right? So what we're looking for here is a continuation of, bullish momentum here, especially since we have this fresh area of demand here. That price created a strong 1 4-hour candle on the way up, right? And as you can see, that was stronger than any of these candles since about this bear candle here. So this candle here happened on June 23rd, and this happened on June 17th, so about a week. We haven't seen this much movement towards either direction. So this shows us a strong demand has entered the market. So let's go here on the 15-minute time frame and see what it's like to look at it on the intraday perspective. So as you can see here, price action is on its way down towards our area of interest, which is this fresh demand zone right here on the 4-hour. Here's what it's like on the 15-minute. So as you can see, price moved down, pushed back right away. So this may feel like, okay, so it seems like we have this instance of support here. So price action may not even be able to break this low here. Might not even be able to, because we have this strong wick, this push up. And those traders that study, you know, candlestick patterns and such, they'll read this as a reversal. Right. This shows that demand is pushing in. And let's continue. Right. Market's pushing back up. So, you know, your reading has come into fruition, and now you could put it into use. You feel like, okay, I'm in some, you know, I was right. Depends if you entered here. If you entered here, then you will be in no profit. You're still being drawn on because of the spread. Right? You see the market push up. I don't think that's still enough to account for the spread. Maybe you being 1-2 pips in profit. Maybe. I'm not too sure on that. But yeah, as you can see, we were waiting for this price to come to this demand zone, and now you feel like, okay, this may be it. You know, I'm just gonna delete my limit, or, you know, my buy limit, or even look at this chart at all, because this is it. This is the move up. And as you can see, price is just slowly moving down. That's Euro CHSF's nature, really. It's a really choppy price action, and then out of nowhere, it could get quite sporadic. Right? This could be another instance where you feel like, you know, price is retesting this demand zone, right? Right? As you see it come down here and reject. The main issue here is that this is honestly just a development of liquidity to the downside, because below this here are sell stop orders, because some traders trade breakouts. So this may feel like that this is strong support. So if price were to break this, then it's likely just to drop further down. So that may or may not be the case. As you can see here on the 4-hour time frame, price is still at this demand area. Me personally, I'm no longer interested, just because I'm not fond of Euro CHF's nature of being so choppy. So I'll just let this slide. But in terms of when it first gave that first touch here, which I don't think we're seeing yet. Let me see. So this here. So I'm gonna just mark it like that. Wait, sorry. You see, this is weird because price is not even touching this. So these lines may be misguiding, or we're not there yet. That's most likely the case. So let's continue on with price action. Bam, it hits area of interest here. So it hits that demand zone, but despite you looking at this strong momentum downwards, you're like, nope, fresh demand zone, I'm buying. You buy. So here you see some type of rejection. So this is about 4 pips. Spread is not letting you have any of it. And then, you know, price, depending on where you put your stop loss, that could have spiked any buyer's stop loss. Because again, even though it got to here, which may seem like it matched this low with this wick, with the spread, it's even lower. So wherever the majority of stop losses were for retail traders in that instance, they got hit. Okay, that could have been including me. But once I saw this momentum here, that's when I stopped. You know, I deleted the limit. I was like, no, this is no good. And for good reason, I closed it. Okay. Now price is just consolidating within that demand zone, which is not a good sign. Even if you were to buy, you would have been probably max 3-4 pips in profit here. Okay. Now we're pretty much headed towards current price action. Like I said, spread is not letting you have any profit here, and you're just holding for extended hours and, you know, consolidation, which is Euro CHF's nature. Okay. Some currency pairs move like this, and this is normal for it. And this is where we are currently. Okay. So I hope you guys found this video insightful. I hope you guys enjoyed it. Make sure you leave a like, comment, and subscribe. I'll see you guys in the next one. Take care.